Good morning, and thank you everyone for attending. Sierra Metals is a growing polymetallic producer, and we've been going through an expansion, and it's been very successful. We put out our Q3 results last night, and we saw increases in revenue, EBITDA, free cash flow, and our costs are dropping, so things are going in the right direction. This is our standard forward-looking disclaimer. So Sierra Metals is a precious and base metals growth story. We have 3 mines in 2 countries. We have the Yaracocha mine, which is our largest mine, located in Peru here, and we produce all 5 metals being zinc, copper, lead, silver, and gold at this mine. Bolivar is our copper mine located in Peru. Sorry. Better? Bolivar is our copper mine located in Mexico, and this mine, although it's mostly copper, we do have some strong silver and gold credits, and in the area that we're moving into mining, there's much more silver and gold there, so we expect those credits to grow. Finally, Cusi is our 3rd mine, and that's our silver mine, about 98% silver at this mine. And in terms of revenue for the 3 mines, this one represents about 70% of the revenue. This one is 25, and this one is just 5, as it's our smallest mine and just growing. In terms of our investment highlights, we have a solid financial position. We are free cash flow, and we're expecting that to grow. But the most important part of this company is the growth story, and that's coming from a couple of areas. One is brownfield exploration success. In 2017, we updated our 43-101s. We had several new discoveries, and we were able to increase our reserves and our resources. We're going to be updating those reports again in December of this year and next summer, and we expect to see further growth in our reserves and resources, as well as improvement in the quality of the resources. We have been optimizing production. We put a new high state-of-the-art tunnel in the Yaracocha mine. We're sinking shafts. We're doing a lot of improvements to optimize production and optimize productivity at the mines. And that's leading to production growth. From the brownfield exploration success, we're now able to expand the throughput at the mines and increase our throughput, increase our cash flow, and grow the company. The company has $40 million in the bank currently. We do have a debt position of $99 million at this point. The last time we raised money in the market was in 2011, and we haven't done a financing since then. We do have paid for all of our growth through our cash flow and through our debt facility. And our debt facility is with Banco Credito del Peru. It's a $100 million facility, 6-year term. The first 2 years are principal repayment grace period, and the interest rate is LIBOR plus 3.15, so very manageable. And we have a net debt position of $58 million. In terms of our capital structure, we have 163 million shares outstanding, 164 fully diluted. We do have a couple of major shareholders, Arias Resource Capital, which is a private equity fund out of New York, and BlackRock, which is out of London. Evie Hambro has 10%, and then we have a few other smaller family offices that have a few percent ownership. We do have some research coverage in the States, as you can see there, and currently the market cap is at around 300 million Canadian. Our brownfield exploration plan has been important to us. That's allowed us to grow our reserves and our resources. As I mentioned, the last time we put out a report was in 2017. Since that time, we've drilled about 195,000 meters of drilling, and that's going to be incorporated in the upcoming 43-101 reports, our technical reports, that will be updated for the Yaracocha and the Bolivar mine in December of this year, and Cusi will come out in June of next year. We are on a growth plan, as you can see here. In 2018, we were at 6750 tons per day throughput at the mills, and now this year we're actually at 8350. And where that growth came from this year is the Bolivar copper mine. We increased from 3,000 to 4,000 tons. And at the Cusi silver mine, we doubled production from 650 tons per day to 1,200 tons per day. Next year, we'll be going to 5,000 tons per day at Bolivar, and the Yaracocha mine in Peru will go to 3,600, and the following year, Yaracocha will go to 5,500. And so we continue to grow through the reserve and resource growth. We're also able to grow now the throughput at the mines. Before we did these expansions, we did a PEA to look at the economics around them. As you can see by the after-tax net present value using an 8% discount, very positive NPV and economics for all three expansions, and the return on investment is very favorable. Kusi has an IRR instead of an ROI due to the fact that that was coming from negative cash flow, so we calculated an internal rate of return for that mine instead. But the most important number I want to bring your attention to, is the combined NPV per share. So the net present value is $3.86 per share based on these studies. Currently, we're trading at about $1.40 US per share. So we see a significant undervaluation for the company. Just a snapshot of the mine. This is our revenue mix for the 3 months ending September 30th. And the revenue mix for the 12 months. You can see that the silver and the copper continue to have the largest share of production, followed by zinc, lead, and then gold. And we are, in terms of the mines, Yaracocha is our flagship mine. We own 82% of that. It's in production. It's an underground mine, currently at 3,150 tons per day. We'll grow to 3,600 next year. It is a polymetallic mine, and that we produce all 5 metals there. And you can see our 9-month cash costs and all-in sustaining costs for this mine. Zinc is trading currently somewhere between $1.05. It gets up as high as $1.10 or so. But we're trading at we produce at less than what that costs. And one of the reasons the all-in sustaining costs are higher is because zinc treatment and refining charges have really grown in the last couple of years. And they're expected to stay higher for the next couple of years. So we're trying to sequence the mine to take more silver and copper out of the mine and wait for the zinc treatment and refining charges to return to normal levels. Bolivar is our copper mine. It's 100% owned. It's production underground, 4,000 tons per day. It's a copper mine. $1.62 is our cash cost. $2.84 is our all-in sustaining. And why the all-in sustaining numbers are high for Bolivar and Kusi is because we spent a significant amount of capital expenditures this year, expanding the mills, expanding the mines, buying new equipment. Those costs are going to disappear next year, and as those expansions are complete, and we're expecting our all-in sustaining costs for Bolivar to be somewhere around the $2 mark next year. And at Kusi, our all-in sustaining cost will be around the $16.50 mark in 2020. So those costs are going to drop significantly as we go into next year. Kusi is our Mexican silver mine. It's in production. There's still some development happening there. It's producing at 1,100 tons per day, and we're starting to scratch at 1,200, which is the new capacity. And as I mentioned already, the costs will drop, especially in 2020. We report our production and equivalent metals because zinc is the highest metal at Yaracocha, copper at Bolivar, silver at Kusi. So we list three different equivalents. You can pick whichever one you like. If we take copper, for example, we produced 80 million pounds of copper in the first 9 months of the year. Production is back-end loaded, meaning that the second half of the year is when we realize the upside of the expansions, and we're going to see more production in the second half of the year versus the first half. And so we're at 80 million pounds for the 9-month period, and will easily fall within our guidance for the full year 2019. Looking at our financial summary here, we've actually have not, as I mentioned, increased our share count since 2011. So on a per share basis, we continue to improve the value for shareholders. And we actually have reduced our share count. We've bought back about 2 million shares, or just shy of, in the last 9 months as part of a normal course issuer bid. Our revenue in our net loss cash, our position this year should be very similar to last year. As I mentioned, the year is back-end loaded, so the improvements are coming in the second half of this year. And so by the fourth quarter, you're going to see our revenue very similar to 2018. The CapEx is higher this year, again, and that's why you're seeing higher all-in sustaining costs. We're at $41,000 for the 9-month mark, and we're probably going to come in around $55 million, for the full year. Next year, we expect that to drop to 45 to 50 million, and beyond that to 30 to 35 million in terms of our all-in sustaining costs. So not only are we going to start to drop our CapEx because the expansions are done, we're going to start to harvest cash, and that'll put us in a position to potentially return capital to investors and to look at other opportunities for the company. This is our Yaracocha mine. It's the oldest mine that we have. It has been in operation since 1948. We acquired it in 2011. When we acquired it, the only area that was in existence was the Central Mine, and they were going very deep. Since that time, we have discovered 3 new zones, and we're actually looking at more, and there should be new discoveries coming. So we continue to find new brownfield targets that are close to the mine head that can be brought into the production plan very quickly. This is just some stats on the mine. It is a very large mining camp. We have 18,000 hectares. We produce concentrates from all of our mines, including at Yaracocha. We sell those concentrates to off-takers, so we just deliver to the port. We don't ship overseas. We get paid once it's at the off-taker's warehouse. And we sell all of our concentrates at spot pricing, and we renegotiate those contracts usually every year. Sometimes it'll go for a year and a half, but typically every year, and we're running that process currently. The reserve life here is 8.7 years. That's based just on the proven and probable. If you include the resources as well, you're probably looking at over a 20-year mine life. And with the upcoming 43-101, we expect to see some further improvement. In terms of our production and our costs, they're listed here. You can see again that the revenue mix for Yaracocha is primarily a zinc mine. However, with the higher zinc treatment and refining charges, we're going to try to pull more copper and silver out of this mine this year. And again, we expect our costs, cash costs and all sustaining costs, to go down a little bit next year, but they're going to pretty much stay where they are until the zinc treatment charges drop. This is a long section of the mine, and we've done quite a bit of work here in terms of infrastructure. We actually draw, this area is mined out, so we moved the surface down to the 700 meter. We put a new state-of-the-art train tunnel where we can run larger locomotives and boxcars, and we can move more ore and waste out of the mine, right through and at the side of the mountain, right to the mill. And then the other area we've done is we have moved the Yaracocha shaft down here so that we can access the other reserves and resources at depth. This other blue line represents a second tunnel that communicates the entire mine, and we're just finishing this up right now. But where this yellow arrow is a very high value target, and I'll explain that in a slide coming up, why that's so important to us. The mine is open to depth. Everything is open to depth. We're finding that the ore bodies are merging at depth and becoming larger ore bodies. We've tested at depth. We know everything continues, but the deeper you go, things get more expensive. So we continue to look closer to the surface for more opportunities. So this is looking down at the mine. This is the Central Mine, the Corpus Pequeños, the Esperanza, and then this is Cachi Cachi. And where that yellow arrow was is this area right here. And why that's so interesting, if you look over on the next map, we have 3 major faults that meet up right or join right where that circle or that yellow arrow was on the other chart. And all of the mineralization typically happens around the faults. So this is a very high value target for us, and we think there's a high potential for a new discovery here. And we're drilling on that now, so we should see that, or we'll be drilling on that very shortly, and we should see some results for that hopefully in the new year. We also have recently received permits to do some surface drilling, greenfield. Although it's greenfield, it's very close to the mine still, about 5 kilometers away. We did something called the Titan 24 survey, which is a technology that can measure quite deep, up to 1,200 meters. We ran a bunch of lines, and what had happened is we've been mining the Yaracocha fault, and we know what's there, and the anomalies proved where we're mining. What we didn't know about was this Chanta fault, and the anomalies here look very similar to the Yaracocha fault, so this could be another twin of the Yaracocha fault, and we're drilling now in this area called Kilkasca. Over here is an area we had done a lot of surface work, and the Titan 24 basically indicated what we have there, and so we're going to be drilling there as well. A very large land package. At Bolivar, we have a copper mine. It's a very large land package, 15,000 hectares, 7-year mine life. We expect that to grow with the upcoming 43-101. Again, we're going to continue to increase the tonnage here, and this is one of our cheapest cost mines at $29 a ton, and our costs next year are expected to drop to $2 all-in sustaining. Here, I don't want to spend too much time just to explain, this is where we've been mining typically. We get about 1% copper. Here in these new areas that we found through a Titan 24 survey, we're getting 1.1 to 1.5% copper, but we're also finding much higher gold, up to a gram and a half, and much higher silver in this area. So not only are we going to see increased production, but increased silver and gold. We have a lot of properties in Mexico that we're working on with a lot of greenfield opportunity as well. I can talk more about that at the booth. And finally, our Cusi mine is our silver mine. This is the most junior one. It's a large land package. We'll produce this year about 1.5 million ounces of silver. And then what's happening here is it's been a reinterpretation. So rather than mining these veinlets, we're now looking in the major zone here. We did an area 600 meters by 400 meters, and everything turned up really well. So we've now extended that to 1.7 kilometers, and we're trying to infill this and bring this into a reserve category for next year. So why would you invest in Sierra? It's a diversified asset-based company. We're strong growth. We're growing all our mines. We have cash flow and debt to pay for, so we don't need to finance. And we have an experienced management team, and we've proven ourselves in terms of our results continuously. Thanks very much.